We're back perfect with this next leg. I'm just going to quickly loop in the links, guys. This is also a doubt solving session. Of course, I believe every session is a doubt solving session if you ask those questions that are required. Any question around can I repeat the entire section is slightly difficult to take because of the limited time constraints, but please make a note of any section that you really don't understand, and we can always deal with them tomorrow because we might have time after we finish everything. So with that intention and with a lot of encouragement and enthusiasm for this next leg and this last leg of day 10, which brings us to the tomorrow's leg, which is day 11, which is the last day, I'm going to set the agenda very quickly, guys. We are looking at TCS, we are looking at advanced tax, and we are looking at a chapter called return of income. If time permits, we will also do some rates of tax, but we'll see how that goes. So this is what we are looking at doing in this session, starting off with TCS, then moving to advanced tax, and so on and so forth. Just before this session, we completed something which is, I feel, the most important chapter or the most important part of the chapter, which is called TDS. Alright, and as we now look at this next leg, TCS, honestly, a lot of people feel that TDS and TCS should not be done together. Yes, it should not be done together at the first time. But assuming, guys, you have studied TDS, TCS before and you have done some background, some classes, some studies, I think we should be able to manage TCS very conveniently. So this is TCS, tax collected at source. Guys, in this case, while in TDS there was a payer in the middle, here you put the seller in the middle. So always, guys, the trick is to start with the diagram. You put the seller in the middle. And this is the seller who's selling a very nice car, a very fancy car to you. This is you, and you're buying a car worth 25 lakh rupees. So this seller has sold you a car worth 25 lakh rupees. This is the government here, and they want to know who is this person who is buying this fancy car. So they tell the seller that, seller, are you going to be collecting 25 lakh rupees? That is the price of the car. Yes. And while you collect it, can you also collect 1% more and pay it to us as tax collected at source at the rate of 1%? But why will you pay 1% extra? Is because the government says, listen, I'm not taking this money is yours only. I have your PAN number also. And in the end, you can take a credit. Yes, whatever TCS has been collected, you can take a credit. So it's almost like the money that you pay, but you can get it back as a credit. The seller says, okay, I will. This, guys, is TCS, tax collected at source. This is one of the sections where the rate is a very small rate, that is 1%. Here, generally, guys, in TDS, it was payment or credit, P or C, whichever is earlier. This you're not paying, you're receiving. So receiving or debit, whichever is earlier. But this one is on receipt basis. This one was on receipt basis, but generally here it is receipt or debit, whichever is earlier. And here, guys, if you don't give the PAN, then it is double the rate or 5%, whichever is higher. That's a punishment. Yes, generally that's the punishment in this section of TCS. I'm not telling the section number right now because that's not important. The concept is important. So on 25 lakh rupees, if you calculate 1%, that comes up to be 25,000. 25,000 will be collected and paid to the government. 25,000 is here, paid to the government. By when do you need to pay it? You need to pay it by the 7th of the next month. Yes. That is same like TDS. Yes. If you don't collect when you are supposed to collect, will you have to pay interest? Yes, at the rate of 1% per month or part thereof till whenever you collect it. So for your mistake of non-collection, 1%. But if you collect and you don't pay by 7th of September, then interest at the rate of 1.5% per month or part thereof. So that is basically 1 and 1.5%. So this is credit, this is TCS, this is 7th of the next month. What else? Of course, if you are selling something to the government, we had that in TDS also, we have it here also, but with TDS, it was only government. Here, if you are selling something to the government or any UN offices or any embassies, example, if this car was not bought by you but bought by any of these people, then there is no TCS. Alright, anything else that you should know? That's about it, guys. This is the concept of TCS, always seller in the middle. But guys, TCS is something that not many people discuss or know. Why is that? Because TCS is on very few goods. TCS is only when you are selling very few goods. So if someone is selling this watch, no TCS. Someone is selling this pen, no TCS. Someone is selling that AC behind me, yes, no TCS. Someone is selling this thermos, no TCS. Someone is selling a phone, no TCS. So no TCS on these things till, of course, recently some change happened. We will see that change. But generally, guys, TCS is on very few commodities. First of all, TCS is only on these things. The shortcut is alcohol scraps or scrapped my car. Obviously, this is a shortcut, so it doesn't have to make any sense. But if you want to make some sense, if you drink alcohol and you drive, the alcohol might scrap your car or might damage your car. So what are you selling? You are selling alcohol. Guys, if you are a seller of alcohol, then will you collect TDS? Yes. Sorry, TCS? Yes. If you are selling scrap, example, you manufacture something. Let's say you manufacture watches and there is some scrap which you sell. You're not a scrap dealer, but you sell scrap which is out of your production. Then in that case also 1% TCS, or sorry, TCS, I'll tell you the percentage later on. If you're selling minerals, then 1% TCS, and if you're selling a fancy car like this, then 1% TCS. So this is all 1%. Yes, alcohol scrapped my car, it's 1%. Only thing is, guys, alcohol, when you buy from a wine shop, guys, I know you guys are 18, but in India the legal age for drinking is 21. So I'm not sure if you ever bought alcohol from a wine shop, and I'm not also going to be hoping or assuming you have. So I'll tell you the experience. When you go to a wine shop and you buy a bottle of wine, on that, will they collect TCS because they're selling alcohol? No, they will not, because this is not at the retail level. That means if you go and buy a bottle of wine, then at the retail level, will they collect 1000 rupees for the bottle plus 10 rupees? No. And this car is only at the retail level. That's how you have to remember it. Alcohol at retail level is not there. So when a manufacturer sells it to an agent sells it to the shopkeeper, will there be TCS? Yes, for alcohol. But for car it's the opposite. When manufacturer sells it to the agent sells it to the dealer, no TCS. Only on the retail there is TCS. So these are both extremes, not on retail level, only on retail level. That is alcohol scrapped my car. 1%, yes, 1%. Next, 2 licenses. Guys, how many licenses? 2 licenses for 2.5% timber and 5 tendu leaves. Guys, you know timber is basically the wood or the trees. Tendu leaves are the ones where you make bedi from. So you need 2 licenses for 2.5 timber and 5 tendu leaves. What is this, guys? This is again a shortcut. Yes. But what is this shortcut? That if you are selling licenses. Now what is selling licenses? Example, let's say there is a parking lot and the government doesn't want to run the parking lot. So can they sell the license to you for 1 crore rupees? Yes. They will charge 1 crore rupees plus 2% more because that's a license. License for parking lot, license for a toll, license for a mine, license for a quarry. Quarry basically, or quarry is basically where you remove stones from. So when the government gives these licenses, not all license, not driving license, etc. So the license for toll plaza, parking lot, quarry, mine, not liquor licenses. Then these licenses, they will collect 2% more. That is basically what is this license. Seller of licenses. If you are selling timber, that means let's say there is a person who's selling timber for 1 lakh rupees. Will he collect 2.5% more? Yes. And someone who's selling tendu leaves worth 1 lakh, he will collect 5% more. So 2%, 2.5% and 5%. That is the idea here. 2, 2.5 and 5. 2 licenses for 2.5% timber and 5 tendu leaves. Alright, so this is the concept here, guys. Are these the only products? Yes, there are two more on which they have recently introduced it. We'll see it, but first this. So these are all the products with the rates, yes, because the examiner will not tell you rates. So you should know 2 licenses, 2.5% timber, 5 on the leaves, alcohol, scrap my car, 1%. This is called TCS, 1%, 2%, 2.5 or 5%. Either on receipt basis, so whenever you receive or whenever you debit that person's account in your books of accounts, whichever is earlier. Example, guys, you receive the money today, but the debit happened last month on 31st July, then 31st July will be the relevant date. Anything else that we should know before we start looking at 2-3 more sections here? That's about it. So guys, now we are coming to 3 specific sections. The first one is when you're buying a fancy car. By the way, the section for TCS is this 206C is the TCS section. Is this complicated? Yes, guys. Do you have to remember it? I don't think so. But try and remember 206 and C for collecting. You're collecting, and always put the seller in the middle. So here we go, guys. This is a section called 206C 1F. F is for fancy car. We already know, guys. I'm just putting the section here. One is fancy car. So this is a seller of car. Yes. Only at the retail level, when he's selling a car which is fancy, fancy means it should be more than 10 lakh rupees. Then from the person he will collect 10 lakh plus he will also collect 1%. We've already discussed this, so I'm not spending too much time on this. The percentage is 1. It is only on receipt basis and it is only at the retail level. This is something that we already know. Now I'm coming to the next one. Guys, the next one is very, very important. Here is a seller. But he's not ordinary seller, guys. He's a high value seller. That means his turnover has been more than 10 crores last year. Guys, this guy was also there in 194Q if you remember, but that time he was the buyer, now he is the seller. Guys, please tell me, can the same person be the buyer also in one transaction, seller also? Yes. Guys, if I'm a dealer in watches, please tell me, am I buying these watches from someone? Yes. And then am I selling them to someone? Yes. Same way, a person can be a buyer and seller at the same time also. So this is that concept. Right now, just focus on the seller aspect. So he's a seller and he's a high value seller. High value means last year's turnover is more than 10 crores. All right. So what is he selling? He is selling any goods. It could be that AC, it could be this pen, it could be this watch, it can be any goods, and he is selling to a buyer for domestic purchases, guys, not export. This is domestic purchases. The government tells him, listen, how much did you sell? He says, I sold for 75 lakh rupees in the year. All right. Then will you be collecting 75 lakhs? Yes. As in when you collect, so only on receipt basis, yes. As in when you collect this 75 lakh, please collect 0.1% more and collect and pay in excess of 50 lakhs. It's very, very good section. I'll repeat, there is a seller. Always start with the seller first. Who is this seller? He is no ordinary seller, guys. He is a seller whose turnover is more than 10 crores last year. If this turnover is not there, then this section only will not apply. Second, he has to sell to one particular buyer more than 50 lakhs. If this condition is also not there, this section will not apply. So this section applies again just like 194Q when these two conditions are satisfied. And when he collects the money, only above 50 lakhs, whatever he collects, TCS at the rate of 0.5%. So let's say he collects one shot the entire amount. So on 75 lakhs, no. Minus 50 lakhs, yes. So on 25 lakhs, 0.1%. that is he will collect 2,500 and pay to the government. Guys, this is a section called 206C 1H. H is high value, and for car it was 1F. F is fancy car. So this is 206C 1H. Let's try and see. This is basically a TCS on sale of any goods. Yes, sale of any goods. Only goods. Yes, only goods, not services. So this does not cover services, not services. Next, what is the TCS rate? Very simple, it is 0.1%. On amounts more than 50 lakhs, yes, only on the excess, yes, only on the excess. Till now, again in TCS also, guys, it was on the entire amount, only on this it is on the excess. TCS at 0.1%, more than 50 lakhs on the excess. Guys, it is on receipt basis. Receipt means, guys, what if I have not collected the money till today? Then no problem, then there will be no liability to pay the government. So only when you collect the money and only when you receive the money, only then your liability starts to pay the government. And guys, again, one simple question, will there be TCS on the GST? No, there will be no TCS in the GST. 50 lakh per year or 50 lakh overall? 50 lakh per collection. So, sorry, amount collected in a year. 50 lakh of amount collected in a year. So yes, per annum. And TCS will not be on GST. No, it will not be on GST. So let's take an example, guys, with dates. Guys, you got an order that someone wants your goods, and there's this buyer who wants your goods, and guys, let's say he paid you 25 lakhs. This is what he's paying you. Please tell me, on this 25 lakhs, will there be any TCS? No. Then you paid you another 25 lakhs. On that 25 lakhs, will there be any TCS? No. Then he paid you 10 lakhs more, guys. On this 10 lakhs, will there be any TCS? Yes. Whenever you receive it, on 0.1% of this 10 lakhs, you'll have to pay to the government. Collect and then pay to the government. Guys, now let's say someone has given you an order of 70 lakhs. So what is the order for? Order is 70 lakhs. Overall order, one order only, overall 70 lakh rupees. So please tell me, guys, are you going to charge him 70 lakh rupees? Obviously. Now, will you also charge him GST? Yes. So guys, I know GST is a different rate and all, but I'm going to assume 10 lakh rupees GST here. Just assume 10 lakhs for round figure. Alright. So guys, totally how much are you going to collect from him? Totally you're going to collect 80 lakhs from him. Are we all clear with this, guys? Please tell me. 70 lakh is the order amount, 10 lakh is the GST. So overall how much are you going to collect from him? Overall 80 lakhs you're going to collect from him. Now guys, first you tell him, before I start the work, I want an advance of 5 lakhs. Or let's say, before I start the work, I want an advance. Guys, please tell me, on that advance, let's say the advance is, let's make the amount slightly bigger here. Let's say this is 2 crores, this is 20 lakhs, and this is 2.2 crores total amount. So you tell him that you want an advance of 70 lakhs. Now please tell me, guys, when you take an advance, do you know how much is towards GST, how much is not towards GST? No, we don't know how much is towards GST or how much is not. So then you will assume that this is entirely towards your money only, and you will deduct TCS, or you will collect TCS 1% over 50 lakhs. Alright. So is this done? Yes. Now, you supplied him the goods. After that, how much balance does he have to pay? He has to pay 150 lakhs after that. So the second payment is 150 lakhs. But in 150 lakhs, guys, how much is now the GST that he's paying? Assuming that earlier he had not paid any GST. he will be paying 20 lakhs GST. So on 130 lakhs, will you collect TCS? Yes. That means, guys, GST, there will be no TCS unless it is advance paid. Then in advance paid, whether he's paid you lump sum, whatever, we will not consider that advance has any GST. How will you give a shortcut? I'll give you a shortcut, guys. On GST, there will be no TCS because on GST there was no TDS also. But if you get an advance, then ignore GST, etc. Whatever advance you get, you have to just see if it's more than 50 lakh on the excess 0.1%. Total TCS for 150 lakh. Yes, total TCS for 150 lakh. Absolutely right. Just 1 second. All right. So guys, just looking at this 2.2 crores, if you take an overall picture on 0.2 crores, which is GST, there will be no TCS. And on the 2 crores on 50 lakh, there will be no TCS. So 150 lakhs, there will be TCS. Absolutely right. All right. Now, I was trying to differentiate between this section and 194Q. So let's try and differentiate between this section and 194Q. First, guys, in this case, who will you focus on? In this case, you will focus on the payer or the buyer. This person is the payer, also called the buyer. And in this case, who will you focus on? You will focus on the seller. Next, what is the TDS rate? 0.1%. What is the rate here also? 0.1%. This is also above 50 lakhs and this is also above 50 lakhs on the excess. Yes, on the excess. Next here, this is on payment or credit, whichever is earlier. This is only on receipt basis. Guys, here also, so I'll just say similarity. This is similar. This is similar. Then last year's turnover, guys, last year's turnover should be more than 10 crores. Here also same, more than 10 crores. Both are not on export, domestic, only on domestic. Yes, only on domestic. And that's mainly the difference between these two. And yes, the biggest difference, guys, if on the same transaction both are applicable. How can be both applicable on the same transaction? I'll tell you, guys. Let's say both are high value. The seller is also high value, the buyer is also high value. That means both have more than turnover more than 10 crores. Yes, and if both TDS and TCS are applicable, then in that case always TDS wins over TCS. How do you remember TDS wins over TCS, guys? Which is the bigger part? TDS. So they are big and hence they win. Always TDS wins over TCS. Lots of people find this very complicated. It is complicated, but the moment you start drawing the diagram, guys, it will all fall into place. And whoever is in the middle, their turnover should be more than 10 crores last year. All right. So this is 194Q, this is 206C1H. Perfect. Guys, moving and looking at the last question here. The last question is here on the cards. 206C1G. Yes. What about date or deposit, Venkat? This I've written payment or credit, whichever is earlier. This is on receipt basis. Perfect. Guys, the next is 206C1G. Next month 7th, yes. Guys, 206C1G, the shortcut is global. Now what is happening here? That again there is a seller, but these are authorized dealers who deal in forex. So they are basically sellers of what they are selling, forex, and this is you, and you want to send some forex abroad. Guys, let's say you want to send some forex abroad. This is the government, and they want to know who are these people who want to sell or buy forex to send abroad. So this is you, and let's say for some reason you want to send some dollars abroad. So you will go to the seller and you will say, I want dollars worth 10 lakh rupees. He says no problem. From his drawer he opens, or he will transfer it online, and he will give you dollars worth 10 lakh rupees. The government says, I want to know who this person is. So they tell the seller, are you going to be collecting 10 lakh rupees from him? Yes, ignoring GST, guys, because GST there is no TCS. So are you going to be collecting 10 lakh rupees from him? Yes. When you collect the 10 lakhs, also collect some more money at TCS and pay it to me. At what rate? At 5%, which is huge, guys. Please tell me, has TCS ever been this high? Alcohol scrap my car 1%. 2 licenses, 2.5% timber. Only on Tendu leaves it was 5%, and now on this it is 5%, but only if the amount of forex is more than 7 lakhs. That means on small amounts, let's say you are transferring 50,000 rupees abroad, no TCS. Only if the amount is more than 7 lakhs, then TCS will apply at the rate of 5%. Yes, receipt or debit, whichever is earlier. See, all those other provisions are the same, but here, guys, there are 2 more exceptions. This is more than 7 lakhs at the rate of 5%, but they say that if you are using this money for a foreign holiday, let's say you are not sending this money for any purpose but for a holiday, then this 7 lakh limit goes away. Then even if you're transferring 10,000, 20,000, 30,000, there will be TCS of 5% without any limit. So the limit, the government doesn't like you to travel abroad, guys. So if you're sending this for travel abroad, then this limit goes away. And what about if you're sending this for an education loan? Let's say you have an education and you've taken a loan for that education. So lots of people go abroad for studies, guys, and they have to pay fees to their universities abroad. So they apply for a loan and they pay that money. If it's an education loan, the government gets a little sentimental and they reduce this TCS rate to 0.5% above 7 lakhs. So guys, there are 3 things. How will you remember? Only remember the first one. Always and only remember the first one. That is more than 7 lakhs at 5%. If it's a holiday, they don't like it, so no limit 5%. And if it's a loan, they like it, so more than 7 lakhs at 0.5%. So this is the concept, guys. Now, this was already come in the exam. This has already also come in the exam. This has also come in the exam. So they have asked direct question on all these 3, yes, but I want to show how TCS is asked indirectly on these 3. But doing a quick recap before this, guys, this is 206C1G. 1G means global. Global means as a seller, yes, always TCS as a seller. What is he selling this time? He's selling forex. If he sells or if he transfers more than 7 lakh of forex, then TCS at the rate of 5%. But if you're going for a holiday and you've transferred the money, then no limit 5%. And if you're going for education and you've taken a loan has to be there, yes, then more than 7 lakhs at the rate of 0.5%. They've reduced the rate here, yes, because sentimental values. 206C1G is basically high value. Turnover should be more than 10 crores. Sale should be more than 50 lakhs. Recovery should be more than 50 lakhs, sorry. And TCS at the rate of 0.1% on receipt basis. 1 fancy car more than 10 lakhs, and otherwise alcohol scrap my car. 2 license for 2.5% timber and 5 Tendu leaves. Interest is 1 and 1.5%. Next month by 7th you have to pay. The last month March you can pay by 30th April. and this is 206C, that's the section number. Guys, this is done and dusted. Let's look at the questions, guys, from this. I want to show you some questions that have come from this chapter. Some direct, some very indirect, guys. Very, very smart. And obviously any TDS, any TCS, you can always take credit. Here, guys. Yes. What are the clarifications given by CBDT with respect to 206C1F, that is fancy car, relating to the following issues? Whether TCS on sale of motor vehicle is applicable only to luxury cars? No, it is applicable to any car more than 10 lakh rupees. Whether TCS is applicable on each sale or aggregate value of sale of motor vehicle, each sale, as in when one car gets sold, you see the value is more than 10 lakh, then TCS at the rate of 1%. Whether TCS is applicable in case of individual, yes, it is applicable in every case except government, United Nations offices and embassies, consulates, etc. Whether TCS on motor vehicle is at the retail level or also by the manufacturer distributor, no, it is not at manufacturer or distributor level, it is only at the retail level. As this question that year was new, so in November 2019 they give 4 marks, and that's what ICI does. They take something that is new and they give you a good question on that. Remember 194P, it's a prediction, it will be there in your exam. 194P pension. Next, guys, all these are TDS, but I'll show you some indirect and direct questions now. So I'm showing you some indirect questions first. On TCS. Guys, Mr. Ashish purchased a car on 2nd of April 2019 for 3,35,000. Will there be any TCS on this, guys, if you purchase a car for 3,35,000? No. And guys, even from second-hand cars, there is TCS, by the way. So on this, because it's not more than 10 lakhs. So this one is not on TCS. But I'm just showing you how it can be asked on TCS as well. Excellent question, guys. This is Krishna, who's into furniture manufacturing. And for furniture manufacturing, guys, his firm had purchased timber under a forest lease of 20 lakh, which is debited to the P&L account. Guys, for a furniture manufacturer, is buying timber a business expense? Yes. And have they debited to P&L account? Yes. So it's perfect. What is wrong? There is nothing wrong. But what people didn't realize here is that whenever a seller will sell timber to Krishna, will he collect from Krishna some TCS? Yes. Remember 2.5% timber, so 20 lakh into 2.5%. So Krishna has already paid TCS of 50,000. So can Krishna take credit of that 50,000? Yes, he can. So this is a very indirect way of asking a TCS question. And in the same question, guys, check this out. Mr. Krishna purchased, same question, guys. Mr. Krishna purchased a new car on 1st of September 2019 worth 12 lakh. So on this 12 lakh fancy car, guys, is also 1% TCS. Yes, so 12,000 TCS. So whenever Krishna is paying his tax, can he take credit of this 50,000 and this 12,000? Yes, he can. So that's a very hidden way of asking this question. Then let me show you one more question, guys, which is a direct question. which was there I think in the Jan paper or the July paper. I don't seem to see it here, but let me just check. Guys, check. He's taken TCS of 50,000 and TCS of 12,000. That was the sum that we just saw. Let me check where are those questions on TCS. Just one second, guys. I can't seem to find those questions. Just one second. No, there seems to be one paper which is missing. Just one second. I'll just be back, guys, and I'll put the paper up. 1 minute. Alright. Guys, advanced tax is very interesting. Of course, it's never been asked in the question exam before, but some very small question on advanced tax has been asked before, but majorly advanced tax is yet to be questioned. Now, what is advanced tax? Guys, let's understand that the government needs money and they don't want to wait. So they have TDS and TCS. If I am earning rental income or professional income, I have TDS. If you are earning tendu leaves, etc., if you're buying, there is TCS. But let's say there is someone who's just a businessman, a restaurateur. Let's say you run a restaurant, very famous restaurant, you sell a lot of things in the restaurant and you make a lot of money. There is no TDS for you, there is no TCS for you. But the government doesn't want to wait till the end of the year. So then in that case, they say, listen, people, if your tax liability is more than 10,000 rupees in the year, then you better pay advance tax. But tax liability means what kind of tax liability? Net tax liability. That means let's say your overall tax liability was 1,30,000, but 20,000 has been deducted in TCS. 10,000 has been deducted in TDS. So the remaining liability is 1 lakh. This is what you need to compare. Yes, I repeat. Advance tax is only supposed to be paid if your tax liability is more than 10,000. What is tax liability? It is net tax liability. That means your overall tax liability minus your TDS and TCS is your tax liability. Guys, they say that we don't want to wait for the end of the year for you to pay us tax or for the next year to pay us tax. So we have kept 4 installments dates. Just send demanded money. I'll write it on a new page. They say that we have 4 installments date, just send demanded money. And on these 4 installment dates, you have to pay us one installment of tax, maximum by these dates. So your tax liability assuming is 1 lakh rupees. They say April, May, June. By 15th June, you have to pay us 15% of your tax liability. Next, by 15 September, you should pay us 45% of your tax liability. By 15 December, you should pay us 75% of your tax liability. And by 15th March, you should pay us the entire 100% of your tax liability. That means they expect you to pay the entire tax during the previous year itself. Yes. And that's why it's called advance tax. Advance basically means before the assessment year. In the previous year only, in 4 installments, you are paying the entire tax. So 15, 45, 75 and 100% are the percentages. Let's see now how they work. On 15th of June or around 15th of June, before 15th of June, you will call up your CA and you will tell him that, listen, last year's business and this year's business almost has been the same. And based on my estimates, my tax liability is 1 lakh rupees. So we need to pay 15,000. Your CA will say yes. So you pay 15,000 here. Next, assuming guys nothing much changes till September. Until September, again your assumption is your tax liability should be around 1 lakh. So you pay 45% here. That means do you pay additional 45? No, you pay only additional 30,000 here. So cumulative it should be 45%. Then you should pay 30,000 here again. So 15 plus 30, you are at 45 and you pay 30 more. So now you're at 75. And then you pay 25 more. So this basically makes it 100%. Yes, 100%. If you total it up, 15,000, 30,000, 30,000 and 25,000. This is basically 1 lakh rupees. So the government in 4 installments gets the entire money. Yes. Please remember, these are cumulative figures, guys. All these percentages are all cumulative percentages. Guys, this is the ideal situation, but ideal rarely happens in life. So what if you were supposed to pay 15,000, but you managed to pay only 9,000? Then the government gets very upset and they said, listen, there is a shortfall. What is the shortfall? 6,000 rupees. On that, you will pay us interest at the rate of 1% per month or part thereof till the next installment date, which is 3 months away. So always with 3 months. Next installment date, you should have paid us 45,000. Till now, you have paid us 9. So 45 minus 9, you have to pay us 36. But let's say you only pay 20,000 here. So 20 plus 20 plus 9 is 29,000. You should have paid 45. So on that 16,000 shortfall, into 1% into 3 months. Here also you should have paid 75, but instead of that you paid 20 more. So 20 plus 20 plus 9 is 49. So 75 minus 49,000. Again you were short by 26,000 this time, into 1% into 3 months. And last you paid 30,000 here. You were supposed to overall pay 1 lakh, but you had only 30,000, you paid it. So 30, 20, 20 is 70 and 9, 79. So from 1 lakh, you paid only 79. So 21,000 is the shortfall into 1%, but this one is only into 1 month. Yes. Why? Because guys, this interest calculation is only for this year and this year is ending in March. So hence in March, this is only 1 month. So please tell me, is someone checking you on every installment date? Yes, that person is an interest section called 234C. C checks you. How many times will they check you? They will check you 4 times. First 3 months, then 3 months, then 3 months, and then last is 1 month. That is what they will check you, 234C. So guys, this is the concept of interest when you pay short. But the government understands that it's very difficult to estimate your income at the start of the year, and hence the government says, listen, for just these first 2 installments, we are giving you a concession that you can pay up to 12% and here up to 36%. What is this concession? Let me explain. You were supposed to pay 15%, that is 15,000. That is ideal. But even if you paid 12,000 or 12.5 or 13, we will not charge you interest. So that means up to 12%. Is there a concession? Yes. But what if you paid only 9,000? Then it's below the concession, so concession disappears, the shortfall is 6,000. Let's take the next example. Ideally you should have paid 45,000, but even cumulatively if you pay 36, 37, 38, we will not charge you interest. But basically you just landed up paying 20 plus 9, 29,000. So is it below the threshold or the concession? Yes, the concession disappears. So guys, till the concession will remain. That means if you pay up till 12% cumulatively or 36% cumulatively, you will not have to pay any interest. But the moment you go below that, the concession disappears and you have to pay interest on the difference till 45% until 15%. So there are two concessions here. Yes, two concessions here. There are 4 interest calculations. 234C is the one who checks. Yes, is the one who checks. That's a shortcut. Always the interest rate is 1%. Yes guys, always the interest rate is 1%. Why is it so low? It's not low, it's 1% per month. And it's always 3 months except the last one, which is 1 month. Basically this interest calculation is only reserved for this previous year. So ultimately guys, you had to pay 9, 20, 20, 70, 30. So you ultimately paid, I think 79,000 you paid. But how much were you supposed to pay? You were supposed to pay 1 lakh. So are you overall also short? Yes. So there is another section called 234B. How do you remember so many sections? I'll tell you. 234C first, it checks. Once 234C ends, that is, it will end in the previous year. After that 234B comes guys, so that's a relay race. Yes, it's a relay race. First, who's running the race guys? First 234C will be running. Yes, 234C. Actually right now don't understand 234B, just understand 234C only. So 234C will check you 4 times and on the 4 times they will charge you interest. Now guys, is advance tax based on a concept of estimation? Yes. And can you estimate a lot of things in your life? No guys, but business is predictable. If you ask someone how much did you make, they will tell you last year's June, this year's June, almost the same. So of course there are fluctuations, but more or less it is similar. But there are 4 incomes no one can predict. So on these 4 incomes, the government says we understand you cannot predict them. What are these 4 incomes? First, you can never predict dividend income. Whenever dividend can be paid, you never know. So hence dividend income you cannot predict. Any casual income, when will you win a lottery, you cannot predict unless you are super normal guys. Any new business, B is business, but new business you can't predict because last year you did not have any precedent. And any asset sale, when are you going to sell the share, when are you going to make a profit or a loss, you can't predict. So hence A, B, C, D are 4 things you can't predict. So let's say you win 10 lakh rupees in KBC today in August 18th. Then in June, did you know you would earn this? No. So would you include in your estimates? No. But now when you do your September calculation, now do you know that you earn some casual income? Yes. So they say A, B, C, D you will not include till they're actually earned. Once they are earned, will you include in the estimates? Yes. So will your 1 lakh tax payable go higher? And so hence will the 45% also go higher? Yes. So basically you need to keep this calculation going every quarter. Again I am saying guys, this advance tax concept does not apply to 4 incomes A, B, C, D. D is dividend income, C is casual income, B is business which is new, and A is asset sale, capital gain. And these 4 incomes, till you earn it, you will not include it in your estimates for advance tax. In fact, dividend not just earned, till you receive it, you will not include it. So these 3, whenever you earn, and dividend whenever you receive, because there is a lot of gap between earning dividend and receiving it. So only when you receive it will you pay or will you include it in the advance tax estimates. Now coming to sections guys, or 2 more things. Advance tax is a pain. Yes, it's very painful, and hence people who are 60 years or more, that is senior citizens, don't have to pay advance tax. So congratulations, if you're 60 years or more, you don't have to pay advance tax. unless you are doing PGBP. So if you can do PGBP, then you can also pay advance tax. That's the logic, guys. So 60 years or more cannot do advance tax or should not pay advance tax, yes, unless they are doing PGBP. Alright, and one more exception, guys. If you remember our friends from PGBP chapter 44 AD and 44 ADA, presumptive income. This is for business, this is for profession. These guys also don't have to pay advance tax except the last installment, guys. So they have to pay only the 100% installment in the end, that is on 15th March. So will they wake up 4 times in a year? No, they will not wake up here, they will not wake up here, they will not wake up here. They will only wake up here, estimate the tax liability, pay 100% of it and go back to sleep. So they will not even be subject to these interest calculations. That is advance tax. Guys, just looking at anything else that we need to do in advance tax right now. Yes, there's just one small thing that I want to show you in advance tax. Once you finish that, it'll be good. Guys, you had to pay 4 installments, 1, 2, 3 and 4. Let's say 15%, 45, 75 and 100%, and let's say you paid this but there was some shortfall. Overall you paid only 85,000 overall. So this plus this plus this plus this is 85,000. There is a section called 234C which will check you here also, here also, here also, here also, and they will charge you interest. But this section gets done in this previous year. So for 234C, this is the year which they will play. 234C will play only in the previous year 4 times. But once this 234C section gets over, there is another friend of his. It's like a relay race. One person runs till here and then the other person will run. But he will not check the installments because installments are over now. He will check the overall advance tax, whether it's paid or not. Overall, you had to pay 1 lakh rupees. But you've only paid 85,000. So overall, is there a shortfall? Yes, of 15,000. On that, again 1% till your return filing due date. So this is again an interest section, yes, but this is called 234B. Is there a shortcut? Yes. C runs first. After that, there is a Hindi shortcut called Baad Mein. After C, Baad Mein is B, 234B. B is Baad Mein. Here, what is the difference between 234C? 234C wakes up 4 times. This wakes up only 1 time. This checks installments. This checks overall advance tax. And here, this is only 333 months. This is till the return filing due date. Now, guys, while we had concession here of 12% and concession here of 36%, same concession 234B gives, and it says overall if you've paid 90%, we will not put that interest. So on 1 lakh, had you paid at least 90,000, we would not levy any interest. But because you've paid even lower than that, then the concession disappears. So if you pay lower than that, then the concession disappears. Guys, this is the concept of advance tax. Alright, so this is, guys, the concept of advance tax. Not really the most important, and not too many questions in the exams to have actually a look at advance tax. But please keep in mind that this depends upon an estimate of your tax liability. As you move ahead in the year, your tax liabilities can change and hence the percentages also change. Perfect. Any question, guys, on advance tax, do let me know. There's one question on RTP, a small question on advance tax which we could do, but otherwise, guys, advance tax has no question overall. Alright, guys, it's been 1 hour 10 minutes. Honestly, as compared to TDS, which was so big, this is so small. We've completed both the concepts very easily. Importance level is also like that. TDS is huge importance. These are not really that important from an exam perspective. We'll take a 5, we'll come back and we will do return of income and some rates of taxes today. So brace yourself, guys. It's a slightly exhaustive session, but we have to finish what we have to finish for a smoother session tomorrow. All right, 5 minutes and we're back. Thank you. Guys, this is the tiniest little chapter. I call it a very cute little chapter, but it gets you some good marks in the exam, surprisingly. While you do the entire salaries chapter for about 2 marks, 3 marks, this chapter, which is smaller, gets you 4 marks. So that's what this chapter is. Every year, a return of income sum is there in the exam. So let's pay attention to this very, very interesting chapter called return of income. Very small chapter, so we will start and end it very, very quickly. And then we will leave everything else remaining for tomorrow. All right. So this is a chapter called return of income. Typically, guys, you attend college for the whole year, and after the year ends, your college gives you a report card of what you've done, how you've done, and you got to get that signature of your parents on that report card. Of course, that was school, not in college anymore. But return of income is something like that. After the year ends, after the previous year ends, you got to tell the government what all you've done, which 5 heads of income do you have, which deductions you've taken, etc., by filing a return of income. So this is a section called section 139(1), which tells you who needs to file their return of income. So section 139(1) will tell you who needs to file their return of income. And by the way, guys, just this one section, if you know well, you can actually do your own consultancy. Anyone who comes to you and says that should I file my return or not, you can actually advise them. So this one section will help you understand and do that really well. So who needs to file first? Anyone who is a company, any company, private limited, public limited, etc., and who is a partnership firm has to compulsorily file. So the shortcut is compulsorily file. So who needs to file compulsorily? A company and a firm needs to file compulsorily. That's the shortcut. So in the exam, if ABC, XYZ Limited, etc., they ask, they definitely have to file compulsorily. Second, for other than companies and firms, you will go to the second step, and second step says that for all others, whether it's an individual or an HUF, etc., you will need to file only if your gross total income. Yes, guys, you read it right. The most useless number is finally finding some use. So if your gross total income plus your 54 series exemptions, if you remember, in capital gain, when you would sell a house, you would have a gain, but when you buy a new house, you would get an exemption. So those 54 series exemptions, not just section 54, but 54H, 54B, 54F, all of those, if your gross total income plus your 54 exemptions are greater than your basic exemption limit, then you need to file your return. So let's recap, guys. Companies and firms need to compulsorily file. For all the others, like your neighbor, guys, if he comes to you, ask him what is your GTI. How do you get GTI? Take 5 heads of income, do clubbing, set off, and then you get GTI. If the GTI plus if he has any 54 series exemptions. Normally, guys, not everyone has 54 series exemptions, but if he has any 54 series exemptions, you add that up, and if both of them together are greater than a basic exemption limit, then the government wants to know who you are. Please file your return of income. And last, guys, if this is also not applicable to you, let's say you're not a company or not a firm, you're a student. Your GTI is, let's say, 1 lakh, you don't have any 54 series exemptions, and your basic exemption limit is 2.5 lakhs. So this is also not true. So you're not finding your return in 1 or 2. Then third, the government doesn't let you go so easily. They say, do you like coffee? They say, do you like coffee? And if you say yes to coffee, then they will ask you to file your return. So what is coffee? Let's understand. If in your current account, you have more than 1 crore rupees deposit in your current account. Example, you saying that you don't have any income, then how come in your current account someone has put more than 1 crore rupees, either from other bank account or cash, whatever it is, but more than 1 crore rupees in your current account? Then the government wants to know, file your return. If you hold assets outside India, O is outside India. If you hold any assets outside India, assets means MISB SATJO. If you hold any MISB SATJO outside India, including financial interest in a partnership firm, maybe you're a partner in a foreign partnership firm, then we want to know who you are. Please file your return of income. I repeat, if your current account has deposits more than 1 crore in this year, if you're holding assets outside India, but assets outside India does not mean a car outside India, it only means MISB SATJO, including a financial interest in an entity abroad. But this one, guys, only applies to RORs. Why? Because, guys, a NR, a non-resident, will definitely have assets abroad. Bill Clinton, Bill Gates, Warren Buffett, Donald Trump will definitely have assets abroad. So not for them, only for ROR? Yes, only for ROR. But guys, what if you have a bank account abroad with only 500 rupees in it, or let's say $1 in it? Then even for that, will you have to file a return? No, they say in case of bank accounts abroad, cumulatively, all the bank accounts together, if you have up to 5 lakh rupees, then this does not apply to you. I repeat, current account is very simple. Assets outside India. Assets means anything which is MISB SATJO, including financial interest in an entity abroad. But if you have only a bank account up to 5 lakh rupees or cumulative up to 5 lakh rupees, then you don't have to file a return of income. If you have spent for your foreign travel or for someone else's foreign travel more than 2 lakh rupees this year, so you've gone for a holiday, good, congratulations, spend more than 2 lakh rupees, congratulations, you have to file a return of income, even if 1 and 2 are not applicable. And last, if your electricity expense, yes guys, they are checking that also. If electricity meter is in your name and your electricity expense is more than 1 lakh rupees, then we want to know who you are. Please file a return of income. Alright, so this is first 1, 2 and 3. These are the people who need to file their return of income. Let's do a quick recap. Who needs to file their return of income? Companies and partnership firms, LLPs, compulsory. Other than that, GTI plus 54 series exemptions, if it's greater than basic exemption limit, then compulsory. Guys, it's not TI, it's GTI here. Please keep that in mind. Or otherwise, if you're loving coffee, then you need to file a return of income. Okay, great. So I know now I have to file my return, but when do I need to file my return? That question is also answered in the same section. When do I need to file my return? For small fish, that means those people who don't need to go for an audit, then you don't need lots of time. 31st July is your due date, which just went 31st July. If you're a big fish, that means you have to go to a CA and get yourself audited, then 31st October is your due date, so you have some time. And if you're the biggest fish, that means you have international transactions, etc., which we will see at CA final, then 30th November is your due date. So guys, these are 3 due dates. Yes, 31st July for small fish, no audit required. So then go and just finalize and file it. 31st October because you need to get an audit done, so it requires more time, and 30th November for the biggest fish, international transactions. Now there's a problem, guys. I am a partner in a partnership firm and they have to pay me salary and interest up to 12%, etc. Salary and whatever they get a deduction, only that much I will be taxed. So my return depends upon their return. But they are a big fish. That means their due date is 31st October. So till they finalize their return, how will I finalize my return? So the government says, okay, if your partnership firm is a big fish, then even you will get 31st October as a due date. Doesn't matter whether you are small fish or big fish. I'll repeat this. You're a partner in a partnership firm, LLP. Whenever they pay you salary or they pay you interest, how much ever is allowed as a deduction to them, only that much is your income, that we know. So then in that case, what if they are a big fish and they will finalize their return only in 31st October? Then we will also be able to decide only on 31st October or only till 31st October. So will we also get a due date there? Yes. But what if the partnership firm has 31st July? No problem. Then you don't have to stick to them. Then it depends on you. If you're a small fish, you also 31st July. If you're a big fish, 31st October. So you have to stick to them only in one case, when they are a big fish and you are not. Only in that case, both of you all will get 31st October. So recapping, only if they are a big fish and you're a small fish, then you have to follow the big fish. Earlier, only working partners would do this. Now working as well as sleeping partners, both will get 31st October as their due date. Guys, looking at the next section, there is no section like 139.2. So there is a section called 139.3. This, they say, is a loss return. Don't get me wrong, this is not a return which has got lost. This is a loss return. Basically means you've incurred some loss in one of the heads of income and you're filing a return, and that's called a loss return. But be very careful with this loss return, guys, because this loss return has to be filed within due dates. If you file it late, then the losses you will not be able to carry forward, which we had also studied in set off chapter, that if you file your return late, then that year's loss, the year you file your return late, that year's losses cannot be carried forward except house property loss, unabsorbed depreciation. Yes. Guys, putting a question on the screen for all of you all to just solve till here, because this is the main part. Check this question number 3B. He seeks your advice as whether he has to file his return of income or not. Check it. You get 2-3 minutes to do this, and then we will discuss it as well. Remember, guys, step 1, step 2, step 3, especially step 2, your GTI plus your 54 series exemptions. Only if it's more than basic exemption limit, you will have to file your return. Please answer this, and I'll be back in 2 minutes and we'll discuss it as well.